What is up, guys? Today we will go over Binance Coin. So we'll go over the technical analysis so you know where to buy and when to sell. Binance Coin has exploded. So let me first off talk about the fundamental analysis on why Binance is exploding. For those who don't know, Binance Coin is Binance token, and if you hold Binance Coin, you can get reduced trading fee, and sometimes Binance will launch a project, and if you want to invest in that project, you have to hold BNB in order to get a chance to invest in that project. They have like a raffle system. Anyways, three biggest reasons why is because there's a lot of new money going into the crypto market space, and Binance have been signing up tons of new account. And people who usually sign up for Binance account will buy some BNB to save money when they're trading. Second off, Binance have Binance Smart Chain. So if you are a yield farming fiend who have been trading on Uniswap and other yield farming sites, you know that the fee is very brutal. People pay up to $50 to $100 on a gas fee. So with a Binance Smart Chain, you can pay about around 5 cents to 15 cents per trade. So that's why right now there is $4.4 billion locked of value locked, and 22 million Binance Coin locked in the Binance chain yield farming DeFi space. And here you can see all the projects that are being built on Binance Smart Chain. Yeah. The site is defistation.io if you're curious. Okay, so now that we have three reasons why I think it's the partial reason why Binance Coin is pumping, let's go to the technical analysis. As you can see, it has made such an insane pump. So what we usually do when we look at a chart is by looking at the monthly chart. We want to look at all the different time frames, because by doing multiple time frame analysis, looking at different time frames, we can see the big picture and the small picture. The big picture helps us to know where the price action is going, and the small pictures help us find chart patterns where we can enter the trade. So the monthly chart is slamming, and then we look at the weekly chart. Weekly chart right here, and then daily. Okay, and if it loads. Okay, so you see at this area in time, this point, from at this range is when whales were accumulating. As you can see, from $38 to like $43. This is the range. There's multiple ranges, but let's just say this is the range that the last chance to accumulate before the breakout. So let's go here a second. So there was this range, and once it broke out of that range, it spiked up around 230%. Okay, so daily chart, and this is when we look at the price action, we can see that since the price has pumped up so much from this breakout, and it's going to like a curve here. See, here's accumulation, semi-accumulation, and it broke off this curve, right? When you look at the daily chart, you can see that the move has exhausted itself, and these wicks here, kind of like whales taking profit. And then now it's consolidating. So we move down to the 4-hour chart to have a more clear picture of this area and what potential chart pattern we can look at so we can buy. So I already drew in this line, but you see that the price action went up here, and then it dropped as whales as whales and bears took profit. And it found support here at this price range, and it bounced back up. Now look at this candle very carefully, because when you see it, the price action poked up here. It poked and it got rejected. So it slams down. That's why you see this wick here. So I already drew this part. This is resistance, and this is support. So what we can semi-expect is price to range around here as the market decides what to do. Since we're in a bull market, I do expect it to break out. Or if it doesn't break out, then it will go something like this. So if it doesn't break out, it means that whales are selling all their stuff, because remember, they have been accumulating very cheap. They've been accumulating for $40 and less all the way back here. For $40 and less, and let's say they held. So they have to sell their stuff slowly, so they don't drive down the price too fast. This is called accumulation and distribution. When it comes to trading, think of it as Walmart. So Walmart buys stuff for cheap. They buy at wholesale price for cheap, and then they sell it to consumers for 200, 300, 400% markup. And in trading crypto, it's no different. Whales have been accumulating BNB for cheap at $40 and under. And once they have made their 200% gain, they're looking to sell slowly, so it doesn't drive down the price too fast. So anyways, okay, so here is the possible scenarios. Since it's the bull market, I do think it's possible for the whales to take profit, and it goes like this before going up. But there's also the counter argument that since we are so overbought, and we can know this by using the RSI, and when the price is over, when the RSI is overbought above 70, right now it's at 93 on a weekly chart, which is insane. What usually happens is that the RSI needs to cool down. It goes like down like this, unless it's diverging. But when it goes down like this, price goes down too. And it's possible that the RSI can like go down in range before popping back up. However, there's a counter argument too, that price simply might range here and then pop back up, because people are because it's the bull market, and people are so happy that they'll buy at any price, because they'll buy high and sell higher. Now that I've told you about the possible scenarios, let's look at risk management and risk to reward, because we always, as winning traders, we want to look at the risk to reward, and you want to enter at a good spot that will make you money over a long run. So you use your long position tool, and let's assume, because we're betting it's a bull market, that the price is going to go up. So here's what we're going to do, and it's very logical too. So say you enter here at $119, and price goes down, you enter, and if price goes up, you take your profit. And if price goes down, it triggers your stop loss, and then you're out of a trade. The reason why we do this is because we don't know where the price is going. Yes, we can predict, but what we're really doing with trading is we're managing risk. So say that you don't place a stop loss and you just enter randomly. So say you enter right now at this price because you think that BNB will go up and you have strong hands and you hold. so you buy here. So you buy here and it goes like this. It goes, I don't wanna. It just like plummets, and then you're stuck bag holding down at 33%. Instead, you want to have a stop loss so you preserve your capital and you can trade off the patterns, the chart patterns. So, like I said earlier, it's possible that price might bounce around. So you can set a intelligent place to enter and exit and a stop loss. So you enter around here, say this is the value range because you think that it will bounce off this support and that you take profit at resistance. You want to put your stop loss kind of deep because there's such thing as market makers who try to take your stop loss and take your money. So you want to put it a bit lower because you don't want to put too tight of a stop loss because price might just go bloop. It might go down and take your stop loss out and before going back up. So this is like a natural, I consider this to be like a natural barrier. The price might go like before bouncing back up, right? Okay. Yeah, so that's the risk management and risk to reward. So thank you so much for watching. If you have any questions regarding technical analysis or you want me to do any coins, let me know and leave a comment below. And thanks for watching. I'll see you next video.